welcome to Trading Lounge and the European indices for the 5th of January 21. So as mentioned yesterday as well, this is a weekly chart here for the DAX, and we are looking at this in a few different ways. So from this wave 4 here, we've been counting 5 waves up. Now the 5 waves up can be wave 1 here or wave 2, and then going up for wave 3 here and so on, or this wave 4 here can be finishing here with wave 5 here and counting 5 waves up through here. It hasn't really made a nice new high above the previous. Well, really the wave 3 here would be the important one, and it has made a new high above that. Not that it has to in Elliott terms. All it needs to do is 5 waves here and fold at that time and move down. So I just think that rather than getting into the guessing game of which is correct and being caught out by that, we need to monitor both of these, so either wave 1 here or wave 5 here. So in a nutshell, I can group these two together and say, well, we can count 5 waves up here and we can have a top in place. So we can look at that as a top in place, but I won't know if it's wave 1 or wave 5. And secondly, the other side, well, we're in a trend here going to the upside. We knew that we would have trouble across the top here. Double tops are never really the end of the trend to the upside. So it's possible that the market can just continue to climb to the upside. So we need to look at a count that can take us higher at that in this trend, and at what point we can be long in that. So as an analyst, we can look at all the different sides, and as a trader, we can put on the trading hat and look for trade setups, either being long or being short. So I think that's the best way to handle this, because you know, we're at these old highs anyway, so we can expect the market to, you know, vibrate here and do some weird things and so on. So anyway, let's go in and have a look at this. So this is the weekly chart. So on the daily chart, so from the low here, we can count, well, I can count 1 and 2 here, all the way up for 3 here, an A and a B and a C for wave 4. And it's possible to count this as 1 and 2 here, and then all the way up for wave 3 here, with an A and a B and a C here for wave 4, and then 5 waves up. Yesterday we were looking for one more little high to come in, so that's finished off in there, because we were counting up through here yesterday. We could count 1 and 2 and 3 and back for 4, and we're looking for wave 5 to move up and make a new high. So that's in place. So if we look at this count like this, not to say that it's wrong or right, but if I do look at it like this here, then we can have a top in play here, and that means that the market would obviously continue to work lower at that point. So we need to understand that. But also too, yesterday we looked at the market just going to the intraday here. We also looked at the market as a possible more positive count to the upside, looking at the move up here slightly different in terms of wave 1 here and coming back for wave 2 here, and then looking at this as 1 and 2 and 3 and 4 and 5. So all this has played out nicely as planned. Didn't quite get to our target area of 14,000. The NASI and the S&P got sold off the same time crude hit $50. So yeah, some of them are a little bit sort of short, but so anyway, this is a possible scenario for a move to the upside, and if that's the case, then we would look for an A wave here, a B wave coming back up, and a C wave coming back down to the 50-60% retracement level, and then moving up from that point. So we need to be a little bit mindful of this. So it does appear that the move down through here is in 5 waves. I mean, could we look at this as wave 3 over here with an A and a B and a C for wave 4 here, as 5 waves down for wave 4, and then we go straight up from that point? That's also possible, so we need to look at that. But this is all a bit of a dance across the 3,800 here at this stage. But also too, on the short side, this low here, you know, once the market moves, if this is correct, we've got 5 waves down here. I don't see a problem with that. It could be the wave 4 here, but we have made a new high here, so still could be an expanded flat, but it's just something to consider. We'll have a look on the tick chart to see what that is in here a bit closer, but still, what I want to say in the bigger picture is that if this is 5 waves down here, then we'll see an ABC correction, and then we'll see another 5 waves down. So once this 5 wave sequence here finishes, any move past that, then it will be bearish coming down at that point. And that's really where we need to look at being short in a bigger way at this point, coming down at that point. We can also be short, once this here is finished as well. We need to understand that a little bit there as well. So based on that, that's the bullish count. Let's have a look at well, this is also the bullish count here and the bearish count. So looking at this as 1 and 2 here, and we're looking at this yesterday as 1 and 2 here as well, but also a top here as wave 5. We can't forget about that. So yesterday we were looking at this as 1 and 2 here, and 1 and 2 and 3 and 4 and 5 for the third wave, and ABC for the fourth wave, and we were looking for a push up into the 14,000. Didn't quite get there, but we still made a new little high here, so we need to put that in as wave 5 of 1. Yes, it could be that we have wave 4 there. I want to check on that on the tick chart, but otherwise we'll be looking at this here as well, wave A, B and C here, or wave 1 here. So that's what we also need to consider, more of a bearish move here. And of course, that would be wave 2 sitting on here. So it would be nice to look at a short position in that space there. So this is 61.8% sitting at 13,400. So if the 13,400 becomes the retested resistance, then you know that we're highly likely to be coming down much further than that point. But this is our saving grace here at 13,400. Let's see if I can go to see if the 15-minute chart does us anything here. Just want to get in here a little bit. So we didn't get to our target. I mean, at first glance it looks like an ABC, but I'm just going to go to the tick chart. We just need to pull that apart a bit and figure that out. Just have to bring in a bit more data here. I'll just bring in a bit more as well. So this is what we've been doing here. Okay, so we could look at this as 1, 2, 3, 4, 5 for 1 and 2 here, and 1 and 2 and 3 and 4 and 5 for the third wave, fourth wave and fifth wave. So we can definitely look at that as wave 1 and 2 here, and this definitely looks like a third wave here, so that's okay. This one here hasn't made a new high above here for that, so that's an issue. But this move here appears to be in 3 waves rather than 5 waves down, and this also looks impulsive as well. So I'm going to look at this as 1 and 2 and 3, ABC for 4 and up for 5 here. So I'm going to put that in as wave 5 there, but everything is okay. There's just that issue of wave 3 being higher here for that. So what does this count down here then? So obviously this is one leg here. This looks like the third wave in here. 1 and 2 and 3 and 4 here. 4, 1, 2, 3. This one. 1 and 2 and 3 to here, 4, 5. So that looks okay. So wave 1 needs to be tied up in here with wave 2 here. So I'm okay with that. So that means that we do need to look at this. Well, we need to look at it in 2 ways, don't we? So I'll just copy that. So I should have this worked out for you, but close enough there. Whoops, daisy. So what we can say is that on the long side, if we get a classic trading levels pattern sitting on top of 13,800, so the classic trading levels pattern will be the arrival, the reaction, the first high above the level, and then the A wave, the B wave, and the C wave here. So then that becomes the long trade setup there. Because it's above the 61.8% and we just gravitate over to the closest largest number, we know that 800 or 8 is a profit-taking number, so so we'll definitely see something of that nature there. So what we could look at here is that this here could be counted in different ways here. It could be counted as an A, B, C for the A wave, and then the B wave here is an A and a B and a C here for the B wave and up for the C wave, or it could be counted 1, 2, 3, 4, and 5 moving up here. I'm not quite sure which is going to be the right way for that. I'll just label this here for the time being, but even, yeah, it's not quite right either. That's going to have to be over here for that, I'm afraid. But that just gives us 3 waves up here, you know. I mean, the reason what I'm saying that for is because if this was going to be wave 1 coming down here, well then the A wave here would need to be in 5 waves, because if this was wave 1 and this was wave 2 here, then the pattern in here would be a zigzag pattern, and the zigzag pattern is 1, 2, 3, 4, and 5. But maybe we could just pattern that, we'll just place that out as the A wave here, pull that back over here for the B wave, and then the C wave moving up into this space here. So so for it to be bearish, we would need to see 5 waves there, then we'd need to see 3 waves here, and then we'd need to see 5 waves here as well for this. So that's what we would need to see for the bearish picture. And we can also look to short across here. We could also short below this wave 2 here. But this is all looking really quite big, right, compared to this structure here. So a zigzag as an A, B, and C as a 5, 3, 5 structure, that should be simple and swift, but it's just the time that that finishes, that's going to be as big as Ben-Hur over here. So that's not looking that good for that. So I'm thinking that we're still on the bullish run for this. Anyway, we'll pick it up tomorrow. We'll just see where we play it out from here. But what I wanted to also say as well, if I just remove this here, well, let's just copy that. That's going to be a little bit longer than that, so that's okay. So that means that this move down through here, let's just get this. If this is going to be 1 and 2 and 3 and 4 and 5 down to here, now, as I mentioned before, we've got down to 13,400 here, but 5 is the second strongest number in the market, so it's highly likely that the market's going to spend some time there. If you see 5 waves here, right, pretty much the same length as this, if you see 5 waves here, then we can go short anywhere under those 5 waves. That's where we can go short, because anything past this zigzag here would indicate that we're in a bigger bearish move at that point. So it's all about counting that 5 wave structure here, if you can do that. And then once this, let's just assume that we've got a bullish move here as the A wave, the B wave, and the C wave down here. That means that once that B wave's in place, that means you can also look to go long at that point there as well. So that's the long trade here, and that's the short trade. So let's just sort of recap this a little bit. we're just in a tricky situation, that's all. So we've just got to work through it. It's just going to take a little while. Let's just go back to the 4-hour chart here for a moment. So for the 4-hour chart, we know that if we're looking for an A wave, a B wave, and a C wave, we can come down to the 400 here. I don't know why I've got that on the 600 here. That's a bit weird. That should be on the 500. Close enough. So I would say that if the 500 became the retested resistance, I think that we could also look to go short from there, and it'll be something like this here. That needs to be retested there, and then we can look to go short at that point. And we can't really go long unless we get support on top of the 8 here. So, I mean, from 13,000 to 14,000, the Fibonacci numbers are 1, 2, 3, 5, and 8. So that's why we can go long on top of, well, there's a bit more to it than that. But yeah, let's just see which way the wind blows on this. Let's see if we've got a top in place. And if not, well then, if we are looking for a bigger bearish picture here, you know, if we can get 1 or 2 trades here above the 13,000, then we'll build in under this as well. So copying that here, and also building in under here once that becomes the resistance. So we want to get a bit of pocket money sitting above the level, and then we can build in under the level, and anything to the upside of the 13.8 will build in on that side. Let's have a look at the FTSE, which will be the same but different. So this is my bullish count for this market, for the FTSE. This is, I'll have to work through this as well. As I mentioned yesterday, if you didn't watch yesterday's video, the platform that I'm using has an upgrade, and a large upgrade, and I've got to get used to all the new functionality with all of this. Some of it's same but slightly different, and some's different. So if this was a bullish picture, that's how we would look at it, right? But the other way to look at this as well, and I know it's a little bit sort of clumsy, but we could look at this here all as wave 1 here and wave 2 here, and then, well, let's just do that. We'll just mark it down. So that could be wave 1. And this is a long shot, don't go throwing tomatoes at me just yet. Wave 3 here and wave 5 over here for this. If we were looking for a top here, then wave 1's got the extension in it. Then wave 3 is obviously much smaller than wave 1. But the thing is wave 5 is smaller than wave 1 here. Wave 3 here. So we could look at this as 1, 3, and 5 here and have a top in play here, and then have this down here as 5 waves, retracement back, and then moving lower at this point. I don't think it's the case, and it's a bit of a long shot, but you know, it will follow the DAX at some point there. But this market, this number here, I'm not that great at mathematics, but I see numbers more in personalities as characters. So this 6,500 here, this is the medium level, and you know, the market's really sticking to it, isn't it? It's a sticky number. So we could say that, well, the market hasn't rejected this number, you know, and the market's coming down at this point, is it? I mean, it's sitting above this number, it's positive, it's not under it, and it hasn't rejected it. I mean, a rejection of this would be seeing it come down here, bounce off it, coming back through here, checking it there, and then taking out this low here. That would be the rejection of that, right? And at that point we can look at being short at that point. That's not a problem. But also too, if it's taking out these highs here, well, then we need to be long at that point. And being, you know, I normally gravitate towards, well, if the market is above a level and it's sitting on there, like this is, you know, sitting on there, I mean, that was the high, this is a new high here, that was the low, that's a low, this is a higher low, that's a higher low. We haven't made a new high here though, but it's kind of got more of a positive bias to it. But of course things can change, but taking this high out here, that would definitely bring us in on the long side of the market at that point. Let's just go back out to the daily chart here for a moment. See, the problem with this one here, as I mentioned yesterday, is that, can we see those prices, time, dates there? The problem with this market is that it hasn't really given us a nice 5-wave move to the upside here. You know, it's just got this big sort of bend in it here. I mean, the stock 50 is different. The FTSE 250 that we looked at yesterday, that was different as well. That counts quite nicely to the upside. This is the FTSE 250 here. So it's really got a nice, you know, structure to the upside here, and this here hasn't folded all the way back down here like the FTSE 100 has. And in this case, we've got nice 1 and 2 here and 3 up here. So this is, you know, this is looking quite sort of, I mean, yeah, sure, we can have a top in place here, and this is the same for the you know, the stock 50 and the stock 600 as well. This is stock 600, so it's, you know, fallen over here somewhat a little bit, and this move up here looks like you know, the S&P and the rest of them at that point. And sure, we could have a top in place here, and we're at 400 in this particular case. I don't know if I've got the stock 50 on this particular charting program. Just checking. No, not that it matters, but yeah, so look, anyway, this is just really, this is a FTSE thing really on the 100, top 100 stocks, not so much the F250, the small, including the smaller stocks, but we're still left with this particular top here that we can look in terms, we can look at it in terms of a bullish move to the upside, or we can look at it in terms of a yeah, bearish. So let me just go into the, let me see what I've done here. So yesterday when we were looking at this, we looked at this here as well. We know we have got the A, the B and the C wave here. So that means that because this is corrective, that means we would make a new high above here. Well, we have made a new high above here. And yes, we could call that a C wave top in play here for that. So this move up through here, we could count that as corrective or impulsive, but because it made a new high, we've looked at it as an impulsive wave yesterday. And then we were looking for this to pull back into the 50-60% retracement level and then move up from that point. So that's all played out quite nicely within that. So this is what we were looking at yesterday. Let me just get this into view here. And yeah, so this was at the 61.8%. It has chucked a bit of a spanner in the works because I could count this down as an A wave, a B wave here, and then a C wave down to here. But because we've got this extra little move in here now and another low here, that could be construed as 5 waves down through here and 3 waves back up because it hasn't made a new high above here. So that's also chucked a bit of a spanner in the works. If that low just there had stayed in, that would have left me with a corrective pattern to this particular point, and that means we could still be bullish at that point. So it's chucked a bit of a spanner in the works, so that's a bit of a problem. So what we'll do is we'll just look to go long above this high here, and if the 6,500 becomes the retested resistance, well then we'll start looking at looking in for some short trades here, but that needs to be rejected at that point there, so I can move that over to here. So we need that first low below the level before we can go short here. And in the meantime, we'll just have a look at what's occurring in this space. I will take a closer look at it. So we're in that 50-60% retracement level area here. We just don't want it going any lower than that, because if it goes any lower than that, then we're going to have to look at this as corrective. So I just want to dive straight into the tick chart here to see if I can just quickly look at that and figure it out. It looks okay for impulsive. I mean, let me just check on that. Yeah, I mean, if I take that low here, I'd have to look at that as wave 1, ABC for wave 2 here. And I'd have to look at this as 1 and 2 here, and 3 to here, and 4 to here, and 5 to here. So that looks corrective at that point. This could be looked at as the A wave. I have to look at that there. It's not very helpful. Doesn't really give me a nice 5 waves down through here for this. And this looks like an A and a B wave here, and then 1 and 2 and 3 and 4 and 5 for the C wave, leaving this 1 and 2 and oh no, that would be 1 and 2 and 3 and 4 and 5 to here. So could count as 5 waves down. I need to look at that a little bit more here. This here now is corrective. I can see that this is corrective. So this is an A wave, a B wave, and a C wave here. I could look at it as wave 1 and 2 here, then wave 1 and wave 2 here. But it's more likely to be a B wave to the upside. So we'll have to look at that the same as the DAX in that regard. And we'll have to look for a bit of a rally coming into play back up to that 6,600. So once again here, we could only go long if we found the top of the 61.8% there as the support. So I think that we probably get a move up here, but then we'll also get a move down from that point. So we could only go long if we get that support sitting on that level. And that would flip us to the upside. Let's just say that the market moves up here for a moment, then anything under here we could look to go short at. You could get a small position under here as well. If it goes up here first and then comes back down through the 6650 here, you could get a short position. Let's just say that it moves up here and then comes back down here, then you can get a short position when this locks in under here for this. Okay, and then we'll also look to build in under here as well, because we'll need to get this here as the resistance here, which is going to take a little while, I'd imagine. So if that just drops straight down through here, then not to get a position, but if it moves up there first and then comes back down and takes that low out here, then we can get that, because that will lock that in there as a 5-wave structure here, then a 3-wave structure, and then we can work this 5-wave structure coming down through here. So let's just go back a bit here for a moment. So as it stands, it's probably likely that we'll get a move back up into this space, and then we'll get a move down here, which will bounce off here, come back and do that routine through this point. So that means that if that moves up here, that means you can get a short trade here, and then we'll also look to build in over here. So the long trades would have to be above that 61.8% there, so that was 6,620 roughly. So you'd need to get support on top of that before gleaning a small position and then looking to add a full position above that high there. So once again, let's just allow this to play out a little bit further. Yeah, we need to, for us to be bullish, we need this market to keep this number here as support and move up higher from that point. Anything below here means that we're basically being rejected this number, and we'll have to look on the short side. Alrighty, so that's it. Not that helpful, I'm afraid, but it's just a problem, an issue that we need to work through until we can establish and confirm the trend in either direction. Okay, cheers.